Now, FedEx shares were under pressure on Friday after the company announced poor preliminary results. The EPS was US dollar 3.44 versus expected of 5.10. The company also withdrew the full year 2023 earnings guidance. Now, with the announcements, the shares were down 11% after market, but over 20% here with the market open. The FedEx CEO said that global volumes declined as macroeconomic trends slightly worsened later in the quarter, both internationally and in the US. And to try and address this, the company's announced a string of measures, including deferring staff hiring, reducing flight frequency of FedEx delivery flights, consolidating sorting operations, and reducing Sunday operations. So will these enacted measures help support FedEx shares higher from here? One thing to be aware of is the seasonal outlook is really quite strong for FedEx at this time of year. You can see from now, sort of 23rd of September, end of September-ish, heading to early December, December the 6th, got an annualized return of 60%, and it's gained 33 times in the last 44 years. So it is a strong seasonal period for FedEx that we're entering into. Now, the major trade risk here is that if the global macroeconomic outlook continues to worsen, that can weigh on FedEx stock still. One upside risk here is if we do see a slowdown in the rate of hikes that the Federal Reserve is thinking of next week on Wednesday, then we could see quite a swift recovery in FedEx. So there are risks to the upside and to the downside with this outlook. Remember though, when you're trading, don't just trade it, seize an exit.